Hey, hey, Jason. Uh, I'm making this video for you, but I'm also gonna post it on YouTube. Um, but this is also a video for any and everybody who ever sees it on YouTube. I haven't made a video in probably a year. Who knows? I wonder when was the last time I made a video. Um, I think the last time I made a video was regarding my Tesla's swing trades and day trades, but this video will be a video to just talk about my process. This process has been adopted from Timothy Sykes and refined by Roland Wolf. I picked up a few stuff from Stephen Duggs and Tim Bertani and just Tim Bowen and Matt and all them boys. But this is mainly um, just to go over my process so that you can see what I do when I'm trading, and also like get an understanding of what trading is and like the possibilities that are out there regarding day trading. I can't show you swing trading as I'm not like proficient in that, and I can't show you long term investing because I don't do it much. Or I don't do it at all, to be honest with you. Like I just don't do it. But so the first thing I do, the market today's a Saturday, so the markets are closed, and it would have been better if I showed you like um um on like a it would be better if I showed you on like an active day, and feel free to watch this video at 1.5 speed, 1.25%, 1.25 speed. Um, as I tend to kind of talk a lot but talk slowly sometimes. So, I won't take it personal or anything. Um, so, first thing I do when I wake up, um, after I either take a piss, take a dump, watch the Lord, or pray to the Lord, sometimes I don't even do any of that. The first thing I do is just um, open my computer and look at the stock quotes first. Um, I look at my scanner first. So some people call it scanners, some people call it screeners. Um, Robinhood calls it screener. This is Interactive Broker, and this is a paper trading account, and they call it scanner. So I'm looking for the biggest percent gainers of the day. So as you can see here, GMM is the biggest percent gainer of the day. So I don't really care for um and for the name of the company and what they do. I don't care. I just look for a few certain things. But typically on a stock like this, um, I would be looking at it from in the time frame that I'll be looking at. I'll be looking at it whenever I wake up, like 7 in the morning, 8 in the morning, 9. Even though that's not a good thing. Sometimes I wake up at 9, and I watch the markets. So let's say it's you know 7 o'clock in the morning, or I can just go over how I traded this stock. I think it was this stock. I got into yesterday, and the first thing I'm looking for is I'm looking at the stock, and I see, okay, this is one of the biggest percent gainers of the day, and I'm looking at the chart, the 1 minute chart. Really, that you should be looking at the yearly chart first, but I prefer to look at the 1 minute chart first. But this says 5 minutes. I put it at 5 minutes so that you can see the whole chart together, and I'm not gonna like rearrange the chart just so I can start at the first minute, or like just rearrange it so that you can see the first few minutes of like 7 o'clock or 8 o'clock. I'm just gonna show you the whole thing. So I look to see, is your chart moving in the way I wish or I typically desire, and I like stocks that I like to see stocks that are, you know, that has looks like it has a healthy chart pattern, not just in the 1 minute chart, but in the 15 minute and the 1 year. So I'll look at the 1 minute and I'll switch it to 15 minutes. Sometimes I just can zoom out and I only need to switch it to 15 minutes. And then I'll look at the yearly chart to see if there's any splits. Splits is a term you're going to have to look up so that they can explain it to you better, because my explanation won't be enough for you to understand, but I'll give it to you right now. Basically, when a company does a lot of dilution, they have uh too many shares, too many shares um available on the market, and they want to increase their value. Plus, they want to stay in compliance with um the SEC. The SEC, they have to put their shares, condense their shares together so that the price is high, because they dilute so much that the price of their stock goes down to next to zero. And if it's under $1, they're gonna get removed from um the Nasdaq, or the the Nasdaq, or just the main market. That's the main market. Um so I'm looking to see if they did any recent splits, because that's what I like. I like to see stocks that done recent splits. If there isn't any, I if there isn't any, I'm just like, uh, um, if there isn't any, I'm not really like tripping too much. I prefer stocks that have condensed their shares and trying to push it back up, because that if their shares are condensed, their price is going to be condensed too, and there's not going to be too many stocks, or not too many shares that's out there on the market. So that means the supply is low, so therefore the demand will be high if the news is good enough. And we're going to go over the news as well. I'm about to show you here, but let me go over everything else first. Um, so after that, um, after that, I'll look at like the 15-minute chart just to see if there's if this is the first or second day that it's up. I like to see if it's up on a couple of days, or is it up on just this first day that it's up. I like to see that. If it's a second, third, fourth, fifth day, I'm not too inclined to trading it, because typically the first day is the strongest day. But if it can hold up its gains for consecutive days, that more than likely means it's gonna shoot up like crazy. Its third, fourth, fifth day. But I haven't really practiced that strategy, so I'm still getting used to it. So after I look to see the chart, um, I like to see what is why is it going up. Um, I like to see why is it going up. Most of the time, I don't care why it's going up, but because as long as it's going up, that's what I need. But there's other criteria before I can even trade it. So even if I don't look at the news, there's still other stuff I have to look at first. Um, So I like to see what the news is. So this company had no news, and I still traded it anyway, which is a red flag to me. But um, it was moving, so I traded it. And I saw the opportunity. Um, but that's one red flag that it has no news. And then here's another red flag. So this is, and this was Yahoo Finance right here, where I just read the news and stuff. Um, and then here's the second red flag. I like to see if they have float, what their float is. This is the supply and demand I was telling you about. Their supply is low. If it's under like 5 million amount of float, which is the amount of shares they have available to trade on the open market, and this is not always accurate and properly updated, but um, uh, um, this website, uh, Dilution Tracker, is one of the most closely accurate, and Yahoo Finance is closely accurate. So let me go over Dilution Tracker first, and then I'll tell you its red flag. Dilution Tracker is exactly what it says it is. It tracks the dilution of low price um, micro cap, micro cap, and just low cap low cap stocks. So basically, what that means is just like really low price companies uh, that are valued at really low prices, and um, micro low. Those are the ones I'm looking for. I'm looking for the worst of the worst companies because they dilute, but they pump up their stocks, and I'm looking for that pump before they do the dump. They're gonna pump and dump, and if you want to learn that terminology, just look it up. But they're gonna pump and dump. I want to ride the pump and get out before the dump. And if I'm short selling, which that's something you want to learn but not do, because it's very advanced and it's very risky. But I also want to short the dump, but I'm not. I'm not. That's not the strategy I'm using right now. So, the first red flag that I see is the name of the country of the country of the company. Anytime you see a Chinese stock or an Asian stock, just know they're doing massive dilution, and it's almost not even worth it to trade their stocks. Sometimes you'll see like this one. Um, this is an outlier. An outlier. Chinese companies, they'll pump up their stock and dump it immediately before you even get a chance to make a profit. They will be looking at the level twos and level threes, which is something you need to look up and understand. But they'll be looking at all the buyers and sellers, and they'll be watching it. There's a scanner that tells you how many people are buying, or not necessarily how many people, but how many shares are being bought at what price and the order that's pending. And then it also level three can tell you what's what, like when you're typing in the order and you have your order sitting, um you have your order sitting where it's pending, or you're about to hit the button to submit it. It will tell you, hey, this person has their finger on the trigger. They haven't even pulled the trigger yet, but they have their finger on the trigger. And it will tell you how many, it will basically expose you on how many shares you have pending, and that you're tempted to press the trigger, but you have not, and they can see that and use that against you. And Chinese people or Asian companies, and I'm not trying to be racist, but hey, I'm prejudiced, and I'll be prejudiced when it comes to investing, because you have to be prejudiced in stocks. Um, you have to be highly pessimistic and be completely against this company. You got to be highly suspicious and negative when it comes to being trading stocks. That's the kind of mindset you got to have. Like, you got to be like, man, these companies are, it's not going to work out, and you got to protect yourself by all costs, because they're after your money. The only way to make money in the stock market is for someone else to lose money. So think of it like it's war. Um, but you don't want to have the mindset of war. You want to have the mindset of protect yourself, and that's how you'll be successful. That's one of the ways you'll be successful. So, Chinese companies are the worst. So, um, red flag right there. It's a technology company. Technology is another red flag. Why? Because technology is technology takes forever for them to get it right. So they have to go through multiple models and multiple um, um, what is it called, prototypes, before they actually have a really good product. So if they have to go through a rigorous process of being successful, 9 times out of 10 they're gonna need a bunch of money, and they're not gonna be selling any products for a long time. So what they gotta do? Use the stock market to manipulate it to make the stock go price go higher. So therefore, I'm always looking for the stocks that move at high percentages with low floats to collect your money, but I'm being extra careful with the country that it's currently in and the sector. Sector, I don't look at it too much, but it's something that I do take consideration in. Um, I do take I do take consideration for. Um, um, that's something I do take consideration for. Um, so then I look here to see this gray area. That gray area is, well, maybe I could show you the other, but that gray area right here, that's there for a reason. That tells you, and you'll see it in other stocks. Like, let me go back to this one. Um, or maybe the other one. I don't know. Maybe it's not. Maybe it's not showing me because I'm not subscribed. But that gray area is supposed to tell you. I think it's gray. It's some color. Because I'm not I have a account with these guys, but I don't have the subscription. I haven't paid for the subscription. But the gray area is supposed to tell you exactly how much shares they have for dilution compared to that of what's currently available to trade and the outstanding. They're supposed to be like multicolors here. And then as you scroll down, you see their cash position, and you see all the different kind of dilutions they have available. So at S1, similar to at the market, warrants, um, different levels of warrants, and I honestly I haven't fully learned this stuff, and I don't fully understand it, but I know to look at the price, um, to go from there, and then they got a shelf. So shelf is basically like equity, where they can dump. From what I understand, I may be wrong, but they can dump at any moment. That's why you don't see any price here. Um, they basically have a bunch of shares that they can dump at a certain at whatever price they want, and they're allowed to raise a total of X amount of money. I know this says 100,000, but here it goes. The total dollar amount that could be raised from the shelf. Total amount raised, you got to have a premium account only. So some of them they max them out, but some of them they don't, and they can have it where it has to reach a certain price before they can dump, and some of them have it where they can just dump whenever they want. And trust me, in order for them to get these deals where they get to dump shares, it comes out of thin air. They don't have to give anything in order to receive this. They can get this all by submitting a couple of documents, and within the hour they can have not a contract, but I don't. The contract's not the accurate word, but they can have um, approval from either the company or the SEC filing, and they can get it immediately and be like, "Hey, we just got accepted to dump all these shares," and they have to notify they have to notify people, their investors on their news feed, but who's watching their news feed every day or all day? No one is. So at any moment they can start dumping shares, and they don't need. It don't take much for them to dump, and they'll hire like a firm or or a underwriter or placement agency. See how it says premium only, so you can't really read it. But they'll hire a company and then tell them, hey, start dumping all these shares. And what they like to do is trick you and tell you, oh, at $118, that's when we're gonna dump our shares. And they'll trick you, no, and you won't even realize they have a warrant or a shelf or something like that. And then on top of that, they can dilute without having none of this. It can be zero dilution, right? And it says, hey, we got zero dilution, we got a low float, and our outstanding shares. Outstanding shares are basically the shares that are available for you to trade and not to trade. Um, so they can have it where we have all of this low as hell to the point um, um, to the point um, you would think they're not doing any dilution, but they will get all this updated. They will get all this stuff literally within the hour, and it's not updated on all the websites. So you'll be like, oh, they have no dilution, they have a low float, low outstanding, just as you see here, right? But then within the hour, boom, they have all this manipulation, and all the websites don't have time to update it. If you want something, if you want a thing to update you, or a website to update you, um, immediately, you're gonna have to pay a lot of money, and you're gonna have to fully understand this stuff. Because most of the stuff you're gonna have to either do on your own, and that's how you'll be updated immediately. But it's not worth it. You should just go for singles, and even if you go for a home run, in the trade, you just get in, get out, and be done with it. Um, but this website has made it easier for you do to gather the research, because the research used to be very intense and hard to figure out. But this website has summarized everything for you, and they made it some of it for free, which is great. So that was a lot of talking right there. So now we talk about how I actually place the trade. Once I gather all that information, and I know I talked a lot about it, but this right here that I explained to you literally takes me in like 2 3 minutes. Um, but I have to explain everything to you for you to really understand, because it's a lot of understanding. But it literally takes me like 2 to 3 minutes. Oh, I just click a few buttons, read, look real quick, and I'm done. So then after that, I go to look for this trade. So I think it was this stock. Um, I forgot what happened, but I either hesitated to get in or I got out too early. I think I got out too early, but I got in to this stock around this area right here at a really good price and a really good amount of shares, and it kept. And there's a lot I would have to explain for you to understand about this stock, but I can't explain everything because it's just too much. But basically, I saw many red flags. I saw red flags in the name of the company, the sector that it was in, the dilution, and the way it was moving, how volatile it was moving, and the way it was moving. So I love the volatility that it goes up a lot, but the way it was moving, it was looking like it had a lot of selling pressure. So each time it went up, it immediately went right back down. And that's why you see these long white lines on top of the candlesticks. You see these white long lines, and if you don't know what a candlestick is, look it up, watch a video about it, so you can fully understand and find out what the candlestick wick is. But you see how it went up, had a wick, and it came back down, had a wick, came back down, pulled back, had a wick. Almost all these candlesticks have long wicks, and that's because each time it went up, there was someone trying to push it right back down. And I saw the manipulation, and I just was like, "Yeah, it's a Chinese company. I don't like it." I got in, and I just accidentally got in with a little bit too much shares, and I got in, and it was just like spiking, coming back down, spiking, coming down, and you could tell it wanted to go up, but somebody or was pushing it down, and I saw that, and I'm like, this stock is highly risky, and at any moment it can dump, and I don't even think it was up over 100% yet, but I'm like, at any moment this stock can dump, and I can't trust it, and it's not moving the way I want to, and I just kind of like poorly performed. Uh, excuse me. It poorly performed, and um uh I was like, you know what? I'm too uncomfortable with this stock. I don't like it, so I got out. And then literally when I got out, I think it was like within that same minute, it was like 30 seconds or so, it had this big spike. And I was like, wow. Um, I was like, wow, I could have made like, I don't know, like $3,000 or so if I would have waited like 10 more seconds or so. I don't know. And I was so upset with myself because the day before, there was another stock that did the same thing. Um, and I missed the opportunity. But the strategy I'm looking for is typically this is just one strategy, low flow, spiking, pre market, whatever. But um, another strategy I like to look for is the morning paddock, dip buys. They call it dipper rips. There's so many different names for it, but this is one of the easiest strategies for me to do. But it took me, what, 10 years to understand it. Um, Timothy Sykes does this strategy all the time, but I never liked it because he never gave the criteria to his strategy. He just gave you 5,000 videos and told you to watch instead of just saying, hey, let me write out the criteria for you, which is so much easier. But he purposely did not give you this criteria so that you can be confused and he can just keep extracting your capital. And I hate to say it, but it's the truth. I still, I won't say, I still will tell him, yeah, I will still say, like, yeah, I learned from him, but he could have been a better teacher. But he's more concerned about himself and what he wants opposed to really helping his students. Um, I spent 12 years learning from this guy, and um, it was just, it could have been massively condensed to like 3, 4, maximum 5 years. But this guy literally had, I wasn't in his best interest. His students aren't in his best interest. He can say all he wants to say about how much work he put in, but nah. There's so many negative things I would say about him. Um, I really admire him, but you know how they say, hey, don't ever meet your idols, the people you admire, because once you really figure them out, you're gonna realize you don't like him at all. And that was a situation with me and Sykes. Um, but it took me so many years to really figure this out because it was never the strategy I like to play. I like the idea of short selling, Um, and then um, I never really understand going long. It didn't make any sense to me. I couldn't figure out how to identify when the stock was gonna go up, and then when I saw it going up, I couldn't tell where to get in and where to get out. I would always play the ABCD pattern, but the ABCD pattern just never really worked out for me. Um, and I always knew that the ABCD pattern required more. But from what they sell on YouTube and what people teach, it requires more information and criteria and understanding. But these guys never really taught it. Um, these guys never really taught it. So, uh, yeah. Um, So after I got in, and this is more of like a this strategy that I'm playing right here is more of a I'm looking to get in under VWAP, or I'm looking to get in with consolidation with certain stuff, certain things that I require, and then go for the upside. It's similar to a morning panic dip buy, or you can call it dip and rip, however you want to call it. There's so many different names for it, but it's more of like a pre-market one, and I'm looking for it to like squeeze during pre-market. Market open, that's when I'm playing the morning panic dip buy strategy, which is from 9:45. Um, and basically, I'm looking for a pullback as soon as the market opens. Um, and that's what I kind of played here. And I'm looking for a pullback and for it to bounce. But in this stock, I got in. I think this was a stock, but I got in and it just kept going down and down. And I kind of like went from having a whole strategy to breaking all my rules, and I started holding and hoping. And I ended up taking what, a 2 grand loss, gave back all my gains for the whole week, and I had to accept that. Um, but that was it. I, I took the loss, and I had to move on. I ended up ending this week with an $800 gain. I made some money back, but that's one of the strategies I'm looking for. Here's the second one. I didn't explain both of them in full depth because I don't think I'm the guy who should be explaining it too much. But you can ask me questions, and I'll go further into depth. But um, there's a far more things you have to understand before you even use a strategy. But that's going to require studying, time in the market to watch, understand what you're seeing, why you're seeing it, what's going on. I'm also looking at the overall market. If I see that this is not really active, I go and take a look at the overall market on Yahoo Finance, and I just go to like I think it's my portfolio or something like that, or markets or something like that, and I can see all the markets and how it's performing, and that'll give me an idea of what penny stocking world is going to do. But that's not always 100% accurate, as many times the overall market can be doing shit and trash and horrible, but penny stocks, companies are desperate for cash, so they're making them go up. Um, but it's better when the overall markets are doing well, plus penny stock markets are doing well, and that way you can make a bunch of money. Um, I don't know what else I can say in this video. I know I talked a lot, but what else? There's a lot that I do, and there's way more than this. It's just not on the top of my mind right now. Maybe I should have written it down. But please buy that book, the Complete Penny Stocking Course book. Although Timothy Sykes, he didn't write it, but he wrote the forward. But although his student got all that information from Sykes and organized it and did better, and although that Sykes wasted a lot of my time and didn't really invest in me, and I don't feel like he really invested in his students. I must say, I read that book. That book was actually helpful. But when I did read it, all that information I already knew because I spent 3 years studying and learning the basics when he could have just taught me the basics straight up. Um, but he just wasted my time. Um, so I won't be doing business with him. Uh, what else can I give? What else can I tell you? I don't know. But this is gonna be the end of the video. If you have any questions, YouTube has direct messaging now. Finally, but I don't think that's a good idea for them to do. You could direct message me and ask me questions.